Hello everyone, welcome to my lecture on Unit 4 Topic 5, How to Journalize the Transaction. That is, we are going to learn about the journal, the first book of entry for all the business transactions that are taken place in the course of conducting the business, as well as the process of making an entry in the journal book is what we are going to deal in this particular concept or in this session. So begin with journal. In accounting, a journal is a record of all financial transactions that a business makes, recorded in chronological order. It's also known as a book of original entry because it's the first place where the transactions are recorded. Now here is the format of a journal entry displayed for you. That is 5 columns. The first column will be date or the details of the serial number of the transactions are given here or displayed here. Account name or the particulars of that particular account will be displayed in the next column, and a small column representing the ledger folio column is there here. It is nothing but it is used to record the page number of the ledger account where transactions have been posted. That is, it acts as an index form or index, right? Basically, it helps to locate the account in the ledger book and reduces the time spent in recording and rechecking it. The next column, the fourth column, represents the debit amount, or next one is a credit amount. Now here is a sample or how the journal entry will be entered is displayed here. That is, debit account first to the credit account. So when the debit account particulars are written here, the relevant debit amount is represented in this column. When the credit account details are furnished here, in the credit column, the relevant amount is written here. Now, as this is a double entry system, for every debit there will be a equal and corresponding credit tends to happen. The next one is below this line. Here the description of the journal entry is here, should be given for every entry. Once the journal entry is passed, that is nothing but we called it as a narration of the transaction. Narration, right? Next. Now here a list of 8 transactions are given or displayed in the slide to make you to understand how the journal entries are journal entries are posted in the journal book, right? For which we are supposed to rely upon the basic and fundamental accounting rules, which again have displayed here, which are already we have discussed in the previous session, and for your reference purpose I have written here on the screen, right? The personal account, the debit the receiver, credit the giver. For real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. These are the rules on which we are going to rely upon in order to pass the journal entries, right? So this is the format drawn for you, where we are going to pass the journal entries, make the journal entries. Now we'll begin with the first one. First transaction. First transaction, it is 2nd Jan 2022. So actually the problem asked here is journalize the following transactions in the books of Varun and Company for the year 2022. So here the first transaction is in the month of Jan, that is 2nd Jan 2022. Started business with rupees 70,000. Now when this particular transaction is given to you, you are supposed to analyze what are the different types of accounts present in this particular transaction. That is, you need to identify for the personal account, the real account as well as the nominal account that are present in the each and every transactions which we are going to come across. So in this first one, started business with rupees 70,000. So the business is receiving the cash, that is 70,000. This is a cash, right? That is nothing but a real account, right? So when the cash is introduced in the business, that becomes a capital. Okay, so when we have identified these two types of accounts here, one is cash as well as a capital here. Now here we are going to make use of these rules in order to pass a journal entries. So once we have identified as a real account, we refer to the rule according to the real account. Debit what comes in, credit what goes out. So what is coming into the business? The business is receiving the cash in the form of a capital. So the first debit account is cash account should be debited and the capital account should be credited. So how we are going to post the entry once these types of accounts are identified? Just let us see. This is the journal entry for the first transaction is cash account debtor to capital account. Now what are the amount here? What is the amount of the capital that is introduced? So for when cash account is debited, we are supposed to enter the cash item 70,000 here, and when we are debiting the capital account, we are putting the same amount under the credit column. So this is how the journal entry will be done, and the relevant narration is written here, that is being the business commenced, right? Now coming to the second transaction. Second transaction on 5th of January 2022 purchased land for worth rupees 1,50,000. Again this is a cash. For this much amount he has purchased land. Cash, it is a real account, and purchased goods, that is land is an asset, it is also a real account. Land is a asset which is a real account. So in this second transaction we are coming across two similar type of accounts, that is real account. So the journal entry for this will be, so rule for this real account is debit what comes in, what is coming in, land is coming in, what is going out, cash is going out. So the relevant journal entry would be land account debtor to cash account. What is the amount here? When land account is being debited, it is debited with 1,50,000 and it is credited with 1,50,000, right? Third transaction. Third transaction on 6th Jan 2022, sold goods for rupees 15,000 to Mr. Kiran. Now when this sales transaction is displayed here, if no buyer's name is displayed, it is assumed to be a pure cash transaction. When the name of the person to whom the goods are sold is displayed, we assume it as a credit transaction. So when it is a cash transaction, in the entry will include cash account. When it is a credit entry, when we are going to include the name of the person to whom the sales are being done. So the relevant journal entry for this particular transaction is Kiran. Kiran is a personal account. And this is sales, goods are sold. It is a real account, right? So according to the personal, to whom the debit the receiver, credit the giver. So Kiran is the receiver, we'll debit his account. So the relevant this thing is entry is Kiran account debtor to sales account. Amount is 15,000 here. 15,000. Similarly, the fourth transaction, seventh transaction, purchased goods from purchased goods again is a real account to Manoj, rupees 22,000 and issued a check. So the check means a bank role is involved here. So bank is nothing but a personal account, comes under personal account. So you are going to apply the rules according to these two types of accounts. That is, what are coming in when you have purchased, goods are coming in. What real account, debit what comes in, goods are coming in. So the credit entries should be in accordance with the personal account. Personal account, what is the credit? Credit the giver. Who is the giver in this transaction? Bank is the giver. So the relevant journal entry will be purchases account debtor to bank account. Amount is 22,000. And below is the narration given to you, that is being goods purchased and issued check. So the next transaction is, fifth transaction is on 10th January 2002, goods returned by Kiran worth rupees 5,000. So who is the returned by means who is the giver? This Kiran is personal account, goods again real account, goods returned, right? So worth rupees 5,000 cash. So when personal account is a giver, and when he is returning, we consider it as a sales returns. So the transaction would be debit what comes in according to real account. It is goods you are receiving on account of returns, that we called it as a sales returns account debtor to Kiran account, since he is the giver according to the personal account. Now what is the amount to which the returns are made? It is 5,000. Okay. And being goods returned by Kiran is a narration for that statement, for that entry. Next one is on 15th Jan 2022, check deposited into the bank worth rupees 10,000. This is cash real account, bank, personal account. So applying the rules according to this, debit, who is receiving the amount when it is deposited? Bank is receiving. So according to the personal rule, debit, the receiver, that is bank account has to be debited and cash account has to be credited. Entry will be bank account debtor to cash account, being the cash deposited into bank is a narration. So what is the amount here? 10,000 debit and in the credit column. Next one, on 20th Jan 2022, goods returned to Manoj. Manoj is a personal account. Goods returned means you are returning the goods what have been purchased. We refer it as a purchase returns, that is real account. So one is real account and one is personal account. When goods are being returned, who is receiving it? Manoj is receiving it. So according to the personal account, debit the receiver, and according to the real account, credit the purchase returns account. The relevant journal entry will be debit the receiver, Manoj account debtor to purchase returns account. What is the amount here? It is 2,000 in the debit column and 2,000 in the credit column, right? And below is the narration for that, being goods returned to Manoj. Next one, 30th Jan 2022, paid salary. It's an expenditure. Commission paid, that means you are paying commission to the agents. It is also an expense. And other journal expenses incurred by the business are also expenditures. All the three items are expenditures, and this category of things come under nominal account. So what is the rule for nominal account? Here it is. Debit all expenditures and losses, credit all incomes, and debit all expenditures and losses, credit all incomes and gains. So what are the expenses here? Salary is an expense, commission paid is an expense, general expense is there. So the journal entry for this would be combined ones, that is salary account debtor, commission account debtor, general expenses account debtor, to all are in the cash form, that is cash account. So one item of salaries is 15,000. Next one is 25,000. Next expenditure is 5,000. Right? So total cash is amounting to 45,000. So So this is about your making of journal and passing of journal entries, and the written part, how you write it on the paper will be look like this. Right, with this I'm ending up the session here. Thank you.